Hey folks, here's the update, the weekend update for the US markets. In this episode, we only discuss the Dow Jones and the S&P 500. I will do a separate one for the Nasdaq and a few FANG stocks because I believe the Nasdaq is most likely to be finished up there. I'm not 100% sure, but once you look into the inner structure, it looks actually a bit different than the S&P and the Dow Jones. We're gonna start off with that sentiment reading, and I was mentioning that, for a proper reversal to the downside, that the bullish side needs to pick up. That what happened, and it kept picking up last week as well. But I want you to pay attention to these dates. March 23rd, we had a reading of around 33% on the bull side. June 1st, we had the same, around 32. And now August 17th, we have 33% on the bullish side again. And they all came from readings below 20%. We had the same here around June 15th. That marked the bottom, by the way. The same in April 27th, where we came from 16 or 15%. And the same with March. And that was also when the bearish side was almost at a 60%, what you see right here. And these dates marked, as I said, the bottoms, and now they basically rebalanced from the retail sentiment side. And keep these dates in mind, and we're gonna hop into the S&P 500, the weekly. And what I wanted to show you is, have a look at that date when we marked the top with that reversal candlestick on the weekly. It was March 28th. We jumped back into here. That was March 23. So it was the same week when we had that where we rebalanced that retail sentiment. And have a look at this date here. It was the week of the 30th of May. We marked the top and then we reversed very sharply. Again, June 1st, the retail sentiment picked up on the bull side and reached its maximum, and then it just kept moving down. And now we have pretty much the same, also like a abandoned baby candlestick, which marked the turnaround, and this looks like a proper shooting star without a gap this time, but also looks like a weekly reversal on the S&P 500. Like 10 days ago, I gave you also that RSI warning that last time we turned around that 53. We marked now 54, so we have like a little negative RSI divergence comparing when we mark this top and this top. So we have a lower high here compared to this one, but a higher RSI reading. That's another warning sign. I also gave you that red resistance zone. We went straight through it and we closed below, which is also a bearish sign. It was somewhere around that 61.8 retracement from that entire move to the downside. And we almost hit that 50-week moving average on the weekly time frame. We didn't really touch that trend line coming when we connect that high and that high, so we missed that out. This one runs on the weekly. Well, it doesn't give me a value. It should be somewhere around that 43.30 area for next week. So that might be still a resistance, some resistance levels which are still open and waiting to get hit. We gonna skip the daily chart and move right into the 4-hour time frame. So 2 candles here represent 1 day at the S&P 500 cash market, and this is the red trend line I was just talking about in the weekly, the black bold one, which runs at 43.30 for Monday morning. And you also see this one here is SMA 400, which is MA 200, and you can see it got hit here precisely on the dot, just below that 61.8 retracement, which got missed out as well. So we turned somewhere around the 50 and 61% retracement from the entire move down from the all-time high. And I want you to have a look at that channel. I used to have that bearish Wilver wave wedge in here. We're gonna check this one on the 1 hour time frame. I took this one out and I left the target line in here because it fits perfectly to that 61.8 retracement. But have a look at that channel. It runs perfectly since the middle of July, and it broke out of there on Friday morning with a gap. And have a look at these cycles. Same story as in DAX. I discussed that in my video I made about DAX earlier. The red one seems to be out of sync, and I put now in the smaller time frame cycle this brownish one. And this one seems to run quite nicely. It hit that low here very accurately at the middle of July. Then it hit that low here. We gapped up with the CPI data. I think it was here, the CPI. So we gapped up here, so we marked that high here as well very nicely, which also at the lower, the confirmation of that writhing channel. And now it suggests another low at the 2nd of July, and it depends now what it is. Are we going to retrace much further down, or is it already like the start of the beginning of a total new decline and we finished up here? That's what we have to wait for next week. There might be a sharper reversal into the end of next week. I believe we run a bit further down, make an ABC to the upside, and then we finish off with a Y somewhere in that area of these 238.2 retracements, somewhere between 4,000 or 4,062 all the way up to 4088. So my first idea is we move down as index on Monday or into Tuesday, do a corrective 2-day X, and then we come down in a W, in a Y. And we're going to hop into a 1 hour time frame. This one is still on the 4 hour time frame. I'm gonna zoom in here a little bit. And what you see is that finish we had ending up in a very nice ending diagonal with 2 Wilver wave wedges. The one I took out already, and the one you still see in here was the bigger one, which hit its target line on yesterday evening just before closing. And there was another one which hit its target line quite a little earlier once you connect this high with that low. So we have a high, a low, a higher high, a lower low, a higher high, and this one got hit on the 17th. Yeah, basically already with the futures we run into there. So this looks like a perfect finish on my point of view. And once we zoom out here into a 4 hour time frame, just one more thing. We hit that 100% target if you consider this as an ABC. I don't think that's it. So let's zoom out here to a 4 hour time frame. And that's a starting point from mid-June. And once we consider this leg here, I just measured for you. I just put the 200 extension, so you see what I mean. This leg here is almost, that's a 200% extension up here. This leg here is almost twice as big as the first leg. So just considering Elliott, this looks also very impulsive because we don't have a lot of overlapping or like cutting at all. And just considering this theory, it should be a wave 3, and there's wave 4 now coming down here, probably to that 4061 area, which would be the 38.2 retracement. And then there's one more leg to the upside. There's a 20% probability that this is a ABC. it's still 20%. I mean, I gave it a 20% to break out of here after that CPA data came out, and we did. So just have that in mind. We might be not finished yet. Just concerning Elliott, we are not done there up here. But as I said, also in bear markets, there is a high probability that they do these fake Elliott counts by a lot. And that might be one of those. And also another very nice thing I wanted to show you is that was that bearish Wolver wave wedge I was showing you for weeks, and I said it looks so like perfectly to me because it has all these very precise hits on that target line and on that channel we moved in here. And then it broke through, reconfirmed that lower trend line, then CPA came out and we just gapped up and ran higher. But now what happened is once we extend that trend line here, it was playing with it like for a whole day, and then it gapped through it and it stayed below it. So that's the first break of that trend we were talking about in the 4-hour time frame as well. And as long as we don't cut this one over here, so that 4,000 area, everything is still fine for the bulls. So just keep that in mind, that this area here, I will probably tell you on Twitter why, has to hold for the bulls. And let's continue with the Dow Jones. One very old chart on the daily. What you see here with that head shoulder pattern, it hit that statistical target right here. It missed out that 100% target, but there was also that bullish Wolver wave wedge in here in blue, and it hit that target line precisely, and then it went through. And that's, by the way, that trend line, once you connect the all-time high with that high over here, we broke through there as well, but this week we closed just underneath. And so this chart is done. Even we missed out here that 100% target of that shoulder panel, a pattern. It just took too long now to get down here. So this chart is, for me, completed in both ways. And we gonna, let me just check, there are smaller time frames, the weekly is quite interesting. We have these patterns here, these cycle brackets. This one here suggests a low as DAX a bit earlier, at the beginning of October for a low. As you can see, I was predicting that move down here a bit more, like I was going for a double bottom. It turned around in that ABC, and then we went all the way up. We cut through that MA30 on the weekly. I'm not sure if we hit the 50. Actually, we did. We hit the MA50, went right through it and came down. And this one here looks also like a reversal bar on the weekly. The same what we had here or here, and this one was much bigger. We had the same candle which marked the all-time high. We still have declining volume. Even on the daily it picked up a little bit on the Dow Jones, and we basically have the same dates here. The Dow Jones moved a bit differently than the S&P 500. That's where the S&P 500 marked the high. The Dow Jones did it like 3 weeks later, but they marked the high also on the first week of January. And now we are there again under declining volume. We hit that sub-cycle low here very precisely. We ran up, and it could be time to turn down. The RSI divergence is still positive, even if we come down here and make new lows. And if this one maintains, and I keep saying that for quite a while, that would be a buy if we won into late September, October for a low. And there is another nice chart here on the daily. That is that so-called descending broadening wedge. So we have like 3 clean touches on the upper trend line, 2 on the lower trend line. It got activated, and I said usually after they touch that trend line, they usually pull back, even they break out a little. That's what happened. It broke out, closed above it, but then it came down. On the weekly candle we have a big reversal, shooting star candle, and here it, as you can see, it turned below the 200 MA and below that trend line, and we left a gap up here. You have to be a bit careful if we keep gapping down here and if we leave that bearish reversal island in form of gap, because that gap here was quite large with that CPI data the week before last week. So yeah, just keep that in mind. Usually these patterns are bullish, and this one looks very, very clean to me, but I have doubt that it actually works out. By the way, the Dow Jones also hit that 61.8 retracement at 34,164. We just went right through it and pulled back. So on the weekly, on the daily, there is much more room for room to the downside for the next couple of days. And here we have the 4-hour time frame based on the cash market. We have a similar channel like in the S&P 500, which broke. The Dow Jones didn't really pull back as much as the Nasdaq and as much as the S&P 500. So it's the strongest of all three right now. And I also adjusted that new channel, that new cycle we probably have, and this one here suggests a low into the end of August, and it might be a pullback into one of these retracements, most likely the 38.2, if this move hasn't been finished and still wants another high. It actually fits quite well if we actually run time-wise into the 30th of August. It fits time-wise perfectly with that 38.2. If this one here turns out to be a bigger channel with the red boundaries I put here. So yeah, have that also in mind. And the last chart, I was discussing that a lot on Twitter. These price levels are based on the futures, but they are not futures. They were just run all the time. And what you see here is that bearish Wilbur wave wedge. It's a 1-hour time frame. The target line, let me just find it. This one here runs at 33,812. And I gave you also that shoulder, left shoulder, head, and right shoulder, which was much larger than the left one, which doesn't matter. It broke through that neckline, and it went further down. It broke it first, then it came up again, retested that neckline, and then it closed pretty much almost at the low of the day. As in the S&P, we marked like an ABC, but as in the S&P, I don't think that's it. I think we move a bit further down on Monday or Tuesday to finish off an 1, 2, 3, and then we come up for 4 and move down for the last leg 5, and then we have a look if this turns out to be just a zigzag, what it looks right now, and zigzags are usually corrective patterns. To pick up these targets, a statistical target of that shoulder head shoulder pattern or the 100% target. I prefer at least, that will be the minimum, the 23.6% retracement of that entire move we started in mid-June. I rather see actually the 38.2 at 32,513, and as you can see, there's a bigger Wilbur wave wedge. I don't have it in here, but you see all these target lines. They all meet here in that green box, and if there is a larger correction now, a larger, sharper decline, watch these lines. They might get hit. Probably not next week, but the following. If we decline further. So that's about it about the Dow Jones and the S&P 500. I probably do the Nasdaq for tomorrow. So don't forget to give me a thumb up or subscribe that channel. And I wish you still a nice weekend. Have a good one. Thank you.